What are the key trends that you would have seen in this last 5 to 10 years?
Consumers are a lot more comfortable buying a used car. It no longer sounds like a compromise. It sounds like a very sound, rational decision.
How do you ensure that the consumers on your platform are borrowing well-informed and responsibly?
Now to do that, of course, what we do is we leverage the bureau score. We work with CIBIL on that. We get the data. The financial needs of consumers is only going to rise as we become more, I would say, developed.
Hello, welcome to our podcast. Today we are diving into a very unique space which is evolving at a remarkable speed, and that is India's used car market. This space is a classic concoction of digital innovation, financing and consumer aspiration. To understand these dynamics better, we have with us Mr. Ruchit Agarwal, co-founder and Group CFO at Cars24. Hi Ruchit, welcome to our podcast.
Thank you for having me.
Before we dive into this conversation, I'm very keen because I've heard that you're also known as Chief Financial Autonaut at Cars24. Yes. Would you like to help us understand this?
So it's a very easy moniker. So at an organization level, what we realized over the last 11 years that auto or vehicle, cars in general is a very aspirational thing for any Indian. When we sell cars, we have all these buyers who come to us, they bring their families and they love this feeling of having a first car in their family. And so we try to relate that feeling to something which uplifts them higher. So we kind of, in a very unorganized way, connected it to an orbit where you have all your vehicles, two-wheelers, four-wheelers and future vehicles all parked together, correlated that with a galaxy. And uplifted the whole mood to say, look, you can aspire to be the best in the galaxy. And therefore, this whole concept of orbit was born for us. That took massive space on our homepage. You can save your cars. Now, how do we as founders or part of the company relate to it? So we started labeling ourselves as Autonauts, right? Like an astronaut. And therefore, Chief Financial Autonaut is just derived from there because I'm also the CFO and hence, there you go.
It's fantastic to know that and a very good concept. But I also must say that the way the platform has evolved today, definitely you guys there are shaping how India buys, sells and finances the used car.
Well, thank you.
Let's dive into this podcast and straight into my first question. We've seen largely in this 5 years, I would say, or rather 10 years we can also count, whenever a person in India would want to buy a car, they would definitely want to explore and hit this platform called Cars24, right? So this is the evolvement of the digital space that India has reached today. With this as a backdrop, what are the key trends that you would have seen in this last 5 to 10 years which has shown up this rapid growth, and what are this never-ending expectations of the consumers on your platform?
It's first of all, thank you for that. India is a country which is developing quite fast. New cars in India are growing at a rapid pace. 40 to 45 lakh new cars get sold every year. And guess what? For every new car being sold in India, 1.5 times used cars get sold. So that translates into 60 to 65 lakh used car getting sold every year. That's 5 lakh cars a month, right? So as India progresses, what has really changed in the last 10 years since our existence, we have seen is consumers are a lot more comfortable buying a used car. It no longer sounds like a compromise. It sounds like a very sound, rational decision. I think compounding that or adding to that is just the affordability aspect. New cars over the last few years with supply chain disruptions, government making it mandatory to have 3-year insurance, the price point of new cars have really crept up. But used cars by design offers you any entry point. You can buy a used car for 1 lakh rupees, you can buy a used car for 1 crore rupees, right? So there's such a wide spectrum that you can play with that it solves for the affordability. And I think with the technology that's changing so fast in cars, like if you look at, I'm going to belie my age now, but so In my time, you didn't really have power windows. You had to open a car like this. You don't have power steering, but these are just basics today, right? So with the car technology moving so fast, consumers want quicker replenishment. They want the cycle of owning the car is becoming faster, and therefore people realize that why should I buy a car and hold it for 10 years? Maybe I just buy a used car and in 2-3 years, 4 years just exchange it for something else. That's really driving all of this. And then finally, I think we will touch upon this later, I'm guessing, but financing as an option also solves for affordability. So as India credit market has opened up in the last 2 decades, thanks to bureaus like TransUnion CIBIL, it allows people to be able to borrow against the car, and therefore solves for the affordability aspect. So all these combined together is just pushing the used car quite fast.
That's a great overview. Thank you for literally walking us through this 11 years, and I can relate to that. When I was a teenager, I had also driven or learned the first time how the car can be driven by that. Shifting gears a little bit, talking about the financing like you touched upon, there's a lot of convenience that the platform offers, right? And going back to your point that people do offer a used car today, and it's an absolute aspirational milestone for a family or an individual when they opt for their first car, and usually a used car also. And when it comes with the borrowing, everything combined or integrated on one platform, the Cars24 and the Loans24 offering as an integrated approach for a user. It's an absolute combination of aspiration, convenience and affordability at the same platform, right? With all this, I would say it's so much of ease and convenience on the tip of your fingers.
Yeah.
With this, how do you ensure that the consumers on your platform are borrowing well informed and responsibly both?
Well, that's a very interesting question. So look, I think what we do is when we have any consumer coming on our platform, we end up helping them discover the right car first, right? What we have done something unique there though is, given that we also have Loans24 lending arm, we are able to pre-approve the customer for any car that he chooses. Typically, if you think about India, the way the financial institutions operate is, let's assume you want to buy a house. What do? You go and figure out your loan affordability, and then you back calculate into how big of a house you want to buy, whether it's a 10 lakh house or a 50 lakh or a 1 crore. A large part of it depends on the amount of loan you could borrow. Now, used car doesn't follow this. What happens typically, conventionally, if you want to buy a used car, you decide the car, then you apply to a financial institution. They check your bureau data, credit worthiness, and then they say yes or no. And if they say yes, then they will say this is the terms I will offer you. But what if they say no? Will you not be able to buy that car? So what we have done is just copied the analogy from the housing market and said, look, if you want to come on our platform and discover the car, why don't you check your credit worthiness with us? Based on that, we will shortlist the cars that you can buy. And then you can also swap the cars. We have no problem because we are underwriting you as a customer. We are not underwriting the car itself. We are underwriting both of them. So that makes the journey quite unique for us, quite simple, intuitive. The first principle remains that you choose the car of your dreams, but we also ring fence it within the realm of what cars you could afford and allow the fungibility to, select the right car, swap the car if you will, and that creates a beautiful experience. Now to do that, of course, what we do is we leverage the bureau score. We work with CIBIL on that. We get the data. We pre-approve the customers. We request more data if we need from the customer. We explain him the logic that why this is helpful. But the hardest part typically comes down to, this is all part of when we sell the cars. We get a lot of requests from different customers who want to buy cars from outside, right? Those are not our platform cars. So in that is an element of fraud that comes in, that also we try and eliminate by helping the consumers. Why? Because we are experts at cars. We understand cars really well. We have developed proprietary engine to value the car, to assess the condition of the car and identify frauds on those cars. So we are able to guide the customers to buy the right cars also, whether it's from our platform or outside, doesn't matter. It's more to make sure that the customer has a great experience. So that is what we have been working on for the last few quarters now.
That's a great perspective, I must say, for a consumer, the convenience and the affordability both at one go. Building on the same point, I would say, you touched upon on the CIBIL score, right? So whenever a person opts for a financed car, borrowing and opting for a car, it is always linked with their credit history.
Yes.
So what, according to you, how important is the CIBIL score and having a good profile around it for the consumer, especially opting for a finance?
I think I can very easily say that's very critical because it's a qualifying criteria, if you will. So we, like most other asset classes, or even if it's an unsecured, any loan class, we check the bureau first to make sure that the bureau history reflects the right thing. We do struggle with thin bureaus, we struggle with new to credit. It's something we are also learning how to underwrite. But if you have a thick bureau, then it makes the journey very smooth, seamless. It's digitally possible because when we see your past precedent, your history of data, and that suggests that you're a good person from a credit lens, we are able to shorten the processing times, skip some of those steps, if you will. If not, then we of course go a little more deeper. We will evaluate the profile more deeply, perhaps even have a conversation with that person to make sure that he can explain any anomalies that might exist in his bureau report. So that's the sort of the basic principle on which we operate, without which I don't think we'll be able to proceed. And the second leg for us, given it's a secured asset class, a muscle that we have developed internally, is underwriting the car itself, because at the end of the day we have to underwrite both the consumer, the buyer, as well as the car. And in this example, the car is a collateral. Based on the assessed value of that collateral is what should define the loan amount to be. And so therefore what we end up doing is using our internal pricing engines, condition assessment engines, fraud engines, able to identify whether it's the right car, whether the documentation of the car at RTO reflects the right status, and then based on that we assess the condition. Once we have a sense of the condition of the car, we back into what the pricing of the car should be. That allows us to apply a loan to value ratio or the affordability index of the customer and arrive at a precise loan amount that the person should be able to afford on this car. This is all dynamic, happening real time. So in case he swaps the car, this recalculation happens instantaneously. So this is something which is something we feel is making a huge difference to consumers' experience, because now it doesn't take 5 or 7 or 10 days to figure out a car loan. Even though it's a secured asset class, it can happen real time, practically speaking.
That's great to know. It's an absolute convenience on the digital platform and assurance at the same time. Moving on to my next question, we've spoken a lot about opting for a used car or a new car with the financing, borrowing available at a tap on your app.
Yeah.
But there also is a concept existing about loan against the car.
Yeah.
Can you help us understand how it works, and does that also impact one's credit profile?
I think it's a very interesting question for us, and something I've been thinking about for a long time now. Let me start off with some broad statistics and then I'll correlate how we arrived at this conclusion. So, if you go to a Chroma, if you go to any shop to buy a washing machine or a TV or a fridge, more than likely you will see a financial institution there on which you can borrow and buy that washing machine, right? So if I want to buy a 50,000 rupee washing machine, I am probably going to take it on EMI, right? Switch to a new car. Let's say you go to an OEM showroom, you test drive a car and you love it. There's again, most likely there's a financial institution standing there who's giving you a loan on that car. Out of 100 new cars sold in India, 80 of them get financed. So, you have a small ticket item, a consumer durable, and then you have a large ticket item. Both of them get deeply financed by financial institutions in India. So that must be true for used cars also, and that was the assumption that I had in my mind. But when we pull the bureau data, some startling facts come out. First, the number of inquiries that happen on new cars versus used cars is 1:6. So for 6 new car loan inquiries, only 1 used car inquiry happens, and one has to wonder why. If you look at the amount of disbursals that happen, the amount of loan book that originates, the ratio continues to hold. So for every every 100 new cars that get sold, I mentioned 80 get financed. The same number for used car is just 20, less than 20. So why would that be the case? Why would a consumer, if he goes and buys a washing machine or a TV, wants to get financed, but when he buys a used car, he doesn't want to get financed? That must not be true, right? So this is the whole hypothesis on which we are kind of building our business model, saying that we challenge this assumption. We think consumers actually do want used car loans. It's just that they're not aware that this asset class exists or that you can take a loan on your car. Now, in a sale purchase scenario, when you're buying a car, you're at a point of sale. So I can explain you. But what happens if you already own a car? Now think about it this way. Indians, there's 4.5 crore used cars in India, passenger cars only. That's 15 lakh crores worth of equity right there. Despite having that, what if you have a wedding at home, you have a medical emergency, you want to invest in a business opportunity, you want to go on a vacation, you end up taking a very expensive personal loan, most likely. Why? Because the process is very simple. A few clicks on an app and you get loan in your account, and that's beautiful, right? But you end up paying a very high interest rate on it. So now correlating all of it together, it feels like there's a huge pool of equity sitting in India in the form of cars that consumers have, but no one realizes that you can actually borrow against it. If I make that process not 7 days, if I make it 7 minutes, then people may be able to borrow much more cheaply and be able to take that vacation or invest in that business opportunity. So that's the whole principle of creating this new asset class called loan against car. It's essentially a cash loan. We're saying it's a cash loan, it's a personal loan. Enjoy the benefits of personal loan, albeit at a much cheaper rate, much more friendlier terms. The only thing we ask in return is you must be a car owner. Link your car to it, hypothecate it, that's it. And that in essence is the loan against car that we are banking on. So the next few years we'll be investing heavily in building this capability, creating that awareness. I think we have to work a lot with Bureau to create that awareness to begin with. Why don't people realize that there's an asset class against which they can borrow?
Thanks a ton, Ruchit. That's really an insight. I would say turning an asset into a financial asset, typically.
Yeah, I think that's a great way to articulate it. Yeah.
Turning that into a financial asset and at the same time maintaining your credit worthiness also.
Yes, 100%. That's always true.
That's fantastic to know, and I'm sure this concept will grow further. We are there to help you for sure.
Thank you.
Moving on to my last question.
Yes.
Like we saw, there's a immense spike in the number of cars sold, purchased, financed in this last 5 to 10 years is what we can say. With all this growing, not just in India but also on the digital platform, and that's how the consumers are digital savvy, tech savvy. They are very well informed. The consumers, especially coming to your platform, are not just tech savvy. They are well informed about how much can they afford and how much can they borrow. Which also means that they are aware of their CIBIL score and the profile. With this as a backdrop, how do you see the future of auto finance in India shaping up?
So, look, I think India in general, if you look top down, it's a credit starved nation, right? We, across asset classes, across the financial needs of consumers, of all Indians is only going to rise. As we become more, I would say, developed, as the nation moves towards 5 trillion, 10 trillion and future, 2047 vision, any developed market to get to that stage needs credit to support it. So the same logic applies to car industry. Car industry by design is a very high ticket size industry.
Absolutely.
It's still an aspirational product in India for most Indians. So affordability is always something that will go hand in hand with the sales of cars, and therefore I think as industry increases, as auto progresses, the financing has to work in lockstep. So in the next 10 years, I feel auto penetration will just continue to increase. Now, new cars already is deeply penetrated. As I mentioned, 80 out of 100 new cars are anyway getting financed. So a lot of that growth will come from used car. A lot of those consumers who end up buying used cars will realize that there's an option to borrow against it as well. That awareness is something platforms like ourselves are creating in these podcasts and discussions with bureaus will solve for. I think it's just a function of time now as that happens, and so I feel one can easily say that the CAGR here would be in excess of 30-40% in the next 5 to 10 years. So very poised to have a very large outcome eventually in the used car and auto financing in general.
Yeah, that's a very, very impressive vision, and thanks a lot, Ruchit, for joining us on this podcast, and thanks for such wonderful insights and a walkthrough on this used car market. I must say this market is not just about evolving the digital platform and offering the used car at affordable and convenience, but it is also ensuring well-informed borrowing for the consumers.
Thank you for having me. Thank you.
With deeper understanding of your CIBIL score and profile, responsible loan management, and digital-first financing platforms like Cars24, India's consumer is well equipped to not just drive their vehicle, but also their financial futures with more confidence. Thank you for tuning in. That was our initiative to Know Your CIBIL. Thank you.